All right, class, welcome. Today, we're going to dive into a really practical part of Canada's tax system, the GST/HST credit. Now, this is something you're all likely to encounter pretty soon, probably right after you file your very first tax return. I know it can sound a little complicated at first, but it's actually quite straightforward once you see how all the pieces fit together. So let's break it down, shall we?
Okay, let's get right into it. So here's our roadmap for today. We're going to start with the basics, what this credit actually is. Then we'll get into the nitty-gritty of who qualifies for it. After that, we'll look at how the math actually works, and we'll even touch on some of the related provincial programs you should know about. And finally, we'll wrap up with the practical side of things, like when you can expect payments and what to do if your life circumstances change. Sound good? Let's jump in.
So, first things first, what in the world is the GST/HST credit? Before we start talking about eligibility rules and all the numbers, it's really important to understand its fundamental purpose. Why does this credit even exist in the first place?
Well, in a nutshell, the GST/HST credit is a tax-free payment. The government sends it out 4 times a year, and it's specifically designed for individuals and families who have low to modest incomes. The whole point is to give them back some of the sales tax they pay on everything they buy. You can almost think of it as a targeted refund for a portion of the GST or HST you've already paid.
Now, there are a few key characteristics you really want to lock in here. First, and this is a big one, this payment is non-taxable. That means you do not report it as income on your tax return. Zero. It's also paid out quarterly, which provides this regular, predictable bit of support. And of course, its entire purpose is to help those with lower incomes, which makes it a really important tool for tax fairness here in Canada.
Okay, so that logically leads us to the next big question, right? Who actually gets this credit? The eligibility rules are very, very specific, so let's walk through them carefully.
So, do you qualify? The Canada Revenue Agency, you'll hear me call them the CRA, they have a really clear set of rules based on things like your residency, your age, and your family situation. Let's break those down.
The main criteria are pretty simple. First, you have to be a resident of Canada for tax purposes. And second, you need to be at least 19 years old. But there are a couple of important exceptions for those of you who might be under 19. You can still qualify if you have a spouse or a common law partner, or if you're a parent and you live with your child.
Let's look at an example to see how this works in real life. Imagine a family, Cameron and Harper, with 2 kids. Their older child, Kristen, turns 19 in August. So what happens? Well, the family's GST/HST credit payment is automatically recalculated to exclude Kristen, starting with the very next payment in October. The key thing here is that Kristen now has to file her own tax return to be considered for her own GST/HST credit.
Now, here's a scenario that might hit close to home for some of you. Alex is turning 19 in January. Now, if Alex files a 2024 tax return, and this is so important, even if Alex has 0 income to report, the CRA will automatically check their eligibility. So Alex could then receive their very first payment in April, which is the first payment quarter right after their 19th birthday. This is a perfect example of why it is so important to file your taxes, even if you don't think you owe anything.
All right, so that's eligibility. Now for the fun part, the math. Let's get into the mechanics of how this credit is actually calculated. This is where we're going to look at the specific income figures and the time periods that the CRA uses to figure out just how much your payment is going to be.
Okay, I need everyone to pay close attention here, because this is a really important concept to wrap your head around, the difference between the base year and the payment period. Look at the table. The information from your 2024 tax return, that's what we call the base year, is what the CRA uses to calculate your payments for the entire period from July 2025 all the way to June of 2026. You see that? There's a lag, there's a delay, and that is a key detail you have to remember.
Now, the CRA doesn't just look at your regular net income. They use a very specific figure called adjusted family net income. Basically, it's your family's net income, but with a few tweaks. They subtract certain things like the old Universal Child Care Benefit or RDSP income. For most of you, this number is going to be very close to your net income, but it's an important technical distinction to be aware of.
So let's talk dollars and cents. Based on that 2024 base year we just discussed, how much can you actually expect to get? Let's take a look at the maximum annual amounts.
If you're single with no kids, the absolute maximum annual credit you could get is $533. And remember, that would be paid out in 4 quarterly installments, so about $133 each time.
Now, for those of you who are married or have a common law partner, that maximum annual credit bumps up to $698 for the couple.
And on top of that, there's an additional credit of up to $184 for each child under 19. Now, and this is really important to remember, these are the maximums. The actual amount you get is gradually reduced as your adjusted family net income goes up.
Okay, but the federal GST/HST credit isn't the whole story, not by a long shot. The CRA also administers several related provincial and territorial programs, which is actually a great example of how our different levels of government work together on the tax front.
You can see just a few of those programs on the screen here for places like New Brunswick, Ontario, and Saskatchewan. And you know what the best part about this is? You don't have to apply for any of them separately. When you file your federal tax return, the CRA automatically, and I mean automatically, determines if you're eligible for these provincial credits too. It's all done in one shot. Really streamlined.
And for our last section today, let's get really practical. We're going to cover exactly when you get paid and, just as importantly, what you need to do when big things in your life change.
The payment schedule is thankfully nice and consistent. Payments are issued 4 times a year, on the 5th day of July, October, January, and April, so you can pretty much set your calendar by it. And if the 5th ever happens to land on a weekend or a holiday, you'll get that payment on the last business day just before. Now here's a really important detail, especially if your relationship status changes. The CRA has a very specific definition for the word separated. It doesn't just mean you're living in different places. It means you're living apart because of a relationship breakdown for at least 90 continuous days. That 90-day waiting period is a firm rule, and you have to respect it before you can officially update your marital status with them.
And let's look at how that 90-day rule works in practice. So Zachary and Kim separate on October 15th. They have to wait the full 90 days. That means they cannot officially tell the CRA until January 15th of the next year. But when they do report it, the effective date of their separation is backdated to the day it actually happened, October 15th. What happens then? Well, their credit payments will be recalculated as 2 single individuals from that effective date going forward.
So, let's end with a final thought to tie all this together. Because of that lag we talked about, that gap between the base year and the payment period, a big change in your income one year can create a major financial surprise the next year. Think about it. A big raise in 2024 won't actually affect your credit until July of 2025, when suddenly your payments could drop significantly. But on the other hand, if you lost your job, you could get an unexpected and probably very welcome increase in your credit about a year later. It just goes to show you that really understanding how this system works is absolutely key to managing your personal finances effectively.